In this video, we're going to go over how to do a balance sheet and how to format it correctly and set it up right. And this is another video from accounting101.org. You can visit our website for more accounting videos, tutorials, and explanations like this at accounting101.org. Okay, so here we have a balance sheet for Scammer Corporation, and it's on December 31st, 2011. And that's one of the first things that we should point out about a balance sheet, is that a balance sheet is always a snapshot in time. Or, in other words, at any given point or on any given day, this is our list of accounts and where the business stands. And so that's an important distinction between the balance sheet and the income statement or the statement of cash flows. The statement of cash flows and the income statement are both statements that cover a period of time, usually the last quarter or the last year, whereas the balance sheet is, like I said, just on any given day. It's a snapshot in time. So the first section that you'll see, well, first of all, you want to notice that the balance sheet is divided into two sides. The left side, which has the assets, and the right side, which has liabilities and stockholders' equity. So first we come up here to assets, and you'll usually list your current assets first, and then investments, if you have any, property, plant, and equipment, and then as you come down, you will go to intangible assets and then other assets. So after current assets are assets that are expected to be used up within a year. So that's why you'll see things like cash, accounts receivable, inventory, prepaid insurance, things that will just be used up within a year on average. That's the assumption. Anything that goes in current assets. Anything after current assets is non-current assets or long-term assets, and so that's everything from investments to other assets. And these are just assets that are expected to be around longer than a year, and so it makes sense. It's stuff like land, buildings, equipment. This is where accumulated depreciation is listed, which just brings you to the correct value of the equipment. That's a whole nother discussion. And intangible assets such as goodwill and patents, those are also long-term assets. Usually, even if they're being amortized, they'll be around longer than a year, so they're listed in long-term assets. Now, if we come over here to liabilities are the same as assets in that they're differentiated between current liabilities and long-term liabilities. So current liabilities, again, it's the same thing. Any liabilities that are expected to be satisfied within a year. So you have accounts payable, wages payable, interest payable, taxes payable, and these are things that just need to be satisfied within a year. And then you have long-term liabilities, which are liabilities that don't need to be satisfied within the next year. And so that's things like notes payable, bonds payable, any major loans, or just any liabilities that don't need to be paid off within the next year. So then you will total liabilities, and then you start the stockholders' equity section. Stockholders' equity is just what the owners of the company own, and it's broken down into different accounts such as common stock, retained earnings. Other things that could be here are preferred stock, additional paid-in capital, things like that. And because stockholders' equity and liabilities are both on the right side, they are added together. And as you see here, the final line is total liabilities and stockholders' equity. And over here on assets, you have total assets. And these two amounts will always be the same. So you've probably heard assets equals liabilities plus owner's equity, and that's just the general accounting equation. So assets equals liabilities plus owner's equity, and that's why the left and right side will always balance, and that's also why it's called the balance sheet. So it's a basic explanation of how to set up a balance sheet in an example format that you can follow. And this has been another video from accounting101.org. Again, you can visit our site for more accounting videos, tutorials, and explanations like this at accounting101.org.